Hello, everyone, and welcome to our training today. Today, we're talking about 401k financing, a type of financing that a lot of business owners don't know about, but very popular with others. As a matter of fact, this is one of the most commonly used type of financing for partners that are coming in to starting a business together. But a lot of people are tapping into this and getting a lot of money when they can't get money through conventional banks or even fintech lenders. So by the end of this training, you're going to know what 401k financing is, how to tap into it, whether you have a 401k or somebody around you has a 401k, you can still tap into that to get money for your business. I'm about to show you how. For those that don't know me, my name is Ty Crandall, and I'm CEO here at Credit Suite. And at Credit Suite, this is what we do. We help business owners get money. So if you're interested in getting money for your business, feel free to give us a ring at 877-600-2487 or get approved at creditsuite.com/get funding. We help you improve your fundability, the things that make you more lendable, help you access all forms of capital in one place, and help you build business credit for your EIN that's not linked to your social. So you can get all kinds of money without a personal guarantee, without personal liability, and without a personal credit check. So if we can help you along the way, our numbers on the bottom of the slides, we've also got links to be able to get funding and to grab free business credit and funding guides. So see those. Okay, so retirement funds are an asset. So the question is, do you have a 401k or stocks now? Now, if you do, 401k, stocks, bonds, IRAs, you need to know that all of those things can be used as collateral to get financing. And you can also be able to do this without losing interest on the IRS without actually incurring any kind of tax penalty. Now, you might be looking at this right away and go, I don't have a 401k, and I don't have stocks, I don't have bonds, I don't have IRAs. That's okay. Because here's the interesting thing. 75% of business owners get money from family and friends to start a business. And the reality is to go to my mom, to go to my dad and ask them for cash is not an easy thing to do because they either have to pull it out of their bank account or liquidate stocks, mutual funds, whatever to give me that money, right? But if I go to mom and dad and say, look, I need this much money to start my business, and I have a way to help you, have you help me get it without it affecting you adversely at all, unless I default and I don't pay back the deal. And here's how it works. You use your 401k, stocks, bonds, IRAs as collateral. I get a low interest rate credit line. You keep your money intact. You still earn interest on it like you always have, and everybody wins in case I default. The reason I suggest this is it's way easier to get somebody to do that for you than give you cash, because either way they lose if you don't pay them back. If you get somebody a loan from your parents to start a business, you don't pay them back, they're out that money. If they let you use the stocks, bonds, IRAs, or 401k to get a line of credit against, then they still earn interest. Nothing happens unless you default, and then they lose that money if you don't pay it back. So as long as you plan on paying it back, they can't lose here because they still earn the interest that they always have. And the cool thing is that you get a very low interest rate credit line. So again, this can work for you if you have stocks, bonds, 401ks, or IRAs, and this can also work for you even if someone around you has it. It opens up the potential of bringing investors into your business and getting money easier than you ever have before. Plus, you're not going to get into trouble because it's tax-free. Again, I'm going to show you how to do this with no tax penalties. So first of all, 401k financing is not a loan, okay? You're not going to have to pay an early withdrawal fee from your 401k. You're not going to have to pay any kind of tax penalties. What I'm about to show you is based on IRS proven strategies to tap into a 401k without tax ramifications, okay? Without early withdrawal fees. So those objections you may have, if I don't want to tap into it because of that, well, those aren't even applicable here with how this is going to work. So you will basically put the money back by contributing just like you do with any other 401k program. This means you don't lose your retirement fund. So let me explain it as easy way as I can. 401k financing basically works because instead of a 401k where you're investing into other publicly owned companies, with a 401k financing, you're basically investing into your own company. So because of that, because of you're just basically switching where you're investing your money, then you don't have all those early withdrawal penalties, all those tax penalties that you would normally have if you're tapping into your 401k and pulling money out. So 401k financing offers a powerful, it's flexible way for a new or existing business and franchise to leverage assets that are currently in a 401k or IRA. Now, what's nice about this is it works for startups and it works for existing businesses. As I mentioned in the very beginning, this is the number one most popular type of financing where people start a business together, where two people come in and say, let's start a business together. Let's be partners. 401k financing is the most common type of financing where they tap into their 401ks to be able to fund that new endeavor. So it's very popular, especially with startups. Okay. And you can get the money in as little as 2 to 3 weeks. So it gives you more control over the performance of the retirement funds, and it also gives you the ability to get money fairly quickly. And as you'll learn about here as we carry on, it's very low interest, and you're able to get a loan, or you're able to even get a line of credit here. So this is a 401k rollover for working capital program. Rollover means you're just rolling it over, okay? So you're not paying penalties, and working capital always means you can use the money for any purpose. So that's a big deal, because with SBA loans, you have to have a specified approved purpose to use the funds. For this, it's like a working capital line of credit. And whenever I teach about working capital, it just simply means you can use the money for any purpose. You don't have set purposes you have to use the money for. Okay, so it's also known as the rollover for business startups, or ROBS, as coined by the IRS. So if you see this ROBS, ROBS, or you see rollover for business startups, that's exactly the principle that this 401k rollover program is. It's not a loan. You're rolling it over, and you're rolling it over basically into a new business or into a business startup. Like I said, easiest way to explain it, you're investing in your business instead of investing in other businesses, which is how 401ks typically work. John, good morning. Thanks for coming in. And Denisha, thanks for sharing this already. Anybody, I appreciate that, Denisha. If you include somebody else on this, if you share, if you like, if you love the video, I really appreciate it. Lets me know I'm on the right track. And if this content's good for you, well, then subscribe to our channel and sign up to get notified whenever we go live. And that way, when we go live a few times a week, you'll be notified. So the plan per the IRS, a ROBS qualified plan is a separate entity with its own set of requirements. The plan, though, the plan through its company stock investments rather than the individual owns the trade or business. Therefore, some filing exceptions for individuals may not apply, okay, because it's basically a business. So ultimately, what's happening, and you can talk to anybody that's a tax expert in your circle, including your accountant. But basically with this, like I said, you're basically coming in and getting stock in your own company instead of other people's companies, which is what a 401k typically does. So this type of financing, as I mentioned, isn't a loan. Okay, so there's no interest you're going to pay. So it's interest free. You can't be interest free, especially when starting a business. Instead, this is simply a movement or change of custodian, because like I said, you're moving the funds from being invested into other businesses to being invested into your own. So it's quite easy to qualify for this kind of financing. You don't need financials. They're not going to look at tax returns. They're not going to look at bank statements. They don't care if you have no revenue. They don't care if your revenue is declined. They don't care if you had $1 million in revenue and now you're at zero. That doesn't matter. And they also don't look at your personal credit or care about your personal credit. So you could be a 355 FICO score and still get approved for this kind of financing. So it's no doc. You don't need to supply the income docs besides proving what's in your 401k, obviously. And your personal credit doesn't matter either. Remember, I talk about this oftentimes. I call it the 3C cash acquisition formula: cash flow, credit, or collateral. One of those three is always used to get you financing. And in this case, we're using collateral. And with the 3C formula, because we're using collateral, we don't need credit and we don't need cash flow. Those two don't matter because we have one of the other C's, which in this case is collateral, because we're using the asset of a 401k as collateral to get the financing. So to qualify, all the lender's going to require is a copy of your 2 most recent 401k statements. Pretty common sense here, right? They need to see what's in your 401k to be able to make this happen. So that's all that's needed, is to prove what's in your 401k, because that's what's being used as an asset. Bank statements, tax returns, credit checks, credit reports, none of that stuff is needed. Now, if your 401k has a value of more than $35,000, you can be approved. As a matter of fact, I've yet to see anybody with a 401k of higher than $35,000 not get approved. Again, credit doesn't matter. And again, this is basically whatever is rollable in your 401k. So you can get a low interest rate credit line or a loan. You can choose loan or credit line for as much as 100% of what's in your 401k that's rollable. And what's rollable means it's not currently with an employer. Okay, this will work with anything that's in your 401k. The problem is your current employer that has your 401k tied to them typically won't let you access that money. So it's not the finance source here that's the restriction. It's your employer that's the restriction. Your employer, if the 401k is tied to them, typically won't let you use the money for any other purpose. So it's whatever's rollable, and whatever's rollable typically means that it's not tied to your current employer. If it's tied to your current employer, they'd have to give you permission to be able to do a rollover, and they're typically not going to. So you can get 100% financing for whatever's in a 401k that's rollable. Let me give you an example here. It's one of my favorite examples of 401k financing. We had a client come in. The guy wanted $25,000 for his bar. Okay, he was starting a bar. He was a retired police officer, and his bank wouldn't give him the 25 grand. They wouldn't help him to get 25,000 to get this business off the ground. So he came to us, and in going through his inquiry and looking at his information, we found that he had a 401k worth almost $750,000. So we got the 401k financing. He'd already retired. And he actually got a line of credit with a 5% interest rate for $750,000 to use for his business. He couldn't get 25 grand from his bank and got 750,000 using this program. So I can give you many examples that are very much the same. Somebody couldn't get the money, then they came in and got considerably more than they even needed access to through a credit line using this program. So the 401k cannot be from a business where you're currently employed. I just talked about this. So you'll need to be it'll have to come from the older employer because they're going to restrict it. They're not going to let you do a rollover. And as I mentioned, your 401k must have a minimum balance of $35,000 for this program to work. Now, the 401k program is perfect for business owners with credit issues because, again, lenders don't even care about that. You can be approved even if you have recent derogatories, even if you have major collections, even if you have a bankruptcy, judgments, any of that kind of stuff, you're able to get approved. And here's the cool thing. You're still able to get very low interest rates, like as low as like 5%. So that's why I love collateral as an asset when it comes to business financing, because if you use collateral-based financing, the interest rates are insanely low. Yesterday on a live stream, somebody said, what's the lowest rate you've seen? I'm like 1.33%. And it's from account receivable financing or AR factoring. So if you use collateral as an asset, you're going to get interest rates way lower than any other kind of financing, including SBA. This will crush SBA terms that you're typically going to get. So this is even cheaper than SBA money, and that's not uncommon. When you're using assets as collateral to get financing, very often you're able to get interest rates lower than what you typically find even with an SBA loan. So as I mentioned, you need the 401k statements, the last two most recent statements, and you can get funding in less than 3 weeks, but you can get it pre-approved within 24 hours. So within a day, you're basically going to know that you're going to be able to get approved without having any kind of penalties. There's no application fees whatsoever to actually get approved for this program. Now, as I mentioned, credit doesn't matter. Okay, so you're still able to get approved. Your company becomes cash rich when you use this and debt free. It's ultimately what happens. So you're basically rolling it over into the new business, and now the business is cash rich and debt free because you didn't have any debt to do it. You're just basically rolling over the 401k. So does this make sense or not? I don't know. I think, a lot of people have a different opinion here. I've got a little pen. I'm going to put my board up here. The reason I say that is that some people say your 401k should be there and never touched, and that's your retirement, and you need to have that as your security. I get that. In the other case, a lot of us have our security in our business, and that is our big payoff, and it's way more than any 401k stocks, bonds, IRAs is going to pay us. And in a lot of cases, as an entrepreneur, we're kind of like the quarterback of the football team, right? Like when the game's on the line and there's 5 seconds left and you're at the 10-yard line, the QB wants the ball, right? They don't want to hand the ball off to the running back. They want the ball. They want to lead it forward. That's kind of the way I feel about 401k financing. Instead of investing into other companies and whatever happens to those companies determining your fate for retirement, with 401k financing, you're basically moving it into your own business, and now you're the QB. You're the one running with the ball. Your retirement's now directly in your hands, and your ability to use that money to grow a business that's worth considerably more than what you're putting in is in your hands. So it's something you have to think about. You can keep it there as financial security, or you can invest it where you could probably get a many-time multiple return of what you ever will with stocks, bonds, 401ks, and IRAs in your own business. And you're not moving all this money in. You can get a working capital credit line. If you want to just use it for a little bit of money that you need and leave the rest intact, you could do that. If you want to use it for the money that you need and then pay back that money into your 401k, you could do that. That's why I mentioned earlier flexibility, because there's so many different options. And John says, yes, makes a lot of sense. And that's what I like. It's just options. Like, you should have options. If you have an asset, account receivables, customers pay you on terms, equipment, inventory. If you have 401k, stocks, bonds, IRAs, if you have account receivables, like I already mentioned that, if you have these kind of assets, commercial real estate, commercial vehicles, use those assets for you. You can leverage those to use those to get the money you need to be able to grow. And remember, we're in business because of multiples. Okay. I don't know about you, but that's why I'm here. when I looked at all the different ways I could retire, I looked at compound interest, I looked at all these different things. What I realized is the best way to make the most money for retirement is to start a business, because I get a multiple of what the business generates in profits. Okay. A typical business with EBITDA gets, 5 times or more of whatever their EBITDA is. So if I make profits of $100,000, well, then I could typically sell the business for 5 times that, 500,000, sometimes more. So that's what's nice about doing a business, is that we get a multiple of our investment into the business. And that's why I think businesses are one of the best ways to pay out in a retirement a large amount of money, because you get a multiple of whatever the business is actually doing in revenue and in sales. So you want to work with a CPA. They will help you roll over a non-contributing and qualifying account. We have a couple great sources for this as well. So if we can help you, 877-600-2487. We've also got a link here, creditsuite.com/get funding. I've got 2 phenomenal sources that this is all they do. And we will connect you with them. We don't make any money. We don't ask you for any money. We will just make the connection and make sure you're taken care of. We've vetted a lot of sources in the space for many years to find the 2 that are the best. This allows for cash out of half, whichever is lower, a cash out of half, or 50,000, whichever is lower for the qualifying account. How does it work? If applicable, the CPA will work with you to structure a self-directing IRA for the remaining funds. You will get a 5-year management and consulting service for your corporation as part of the process. Okay. The terms are 5 years. The cost is 1%. You'll pay $5,000 for a lender fee for the 401k option. It comes out of the actual financing, which includes 5 years worth of management and consulting. So all of that is included into that. Okay. I think that our source, we've got a source that even charges $1,000, I think, to be able to do this. So is it legal? Absolutely. Under the Employee Retirement Income Security Act, the burden of building retirement assets has shifted from the employer to the employee, and you could be younger than 59 and a half years old, and you won't have to pay an early withdrawal fee. As I mentioned, you're able to do this instead of without paying any kind of fees. So basically, you're investing in a company you control. Its fortunes are in your hands. Your employees can use the new 401k plan too if you want to. You can help them take care of their own retirement. You can even use this to roll out 401k programs for your own employees, which is awesome. But as I mentioned before, what I like about this is it gives you the option to captain the ship. If you don't want to have your hands in the stock market anymore and have your fate there, you take the fate back and put the fate back into your business. Now, there's risks either way, right? The business could fail. Your stocks could be meaningless. Either way, there's risks. You have to determine which one has the less risk that you're willing to take. But again, in my mind, quarterback, I want the ball. I want to be able to run with it, apply it to my own business, have my business make the money, and then pay back whatever I used. Versus let it sit in the stock market. But that's just subjective. It's a completely opinion based on what makes most sense for you. Okay. So with 401k financing, you're going to be able to enjoy your business's success today and the future and when you retire. Okay. And unless you're over 59 and a half years old, you'll be paying an early withdrawal penalty. Yes, you'd be paying to use your own money. So don't get a distribution. So bottom line is you can get out of this without paying any kind of penalty. That's what's most important. And of course, with a loan, that means you'd be paying interest, but you're not paying interest on this because it's a rollover. So there's not any kind of interest that's actually paid on your end. And John says, I like the control. I do too. I like the flexibility of it. And this program allows you to tap into your existing retirement account with no penalties, no tax distributions. You can use the funds for your business. It helps you avoid loans, helps you avoid banks, helps you avoid credit checks, helps you avoid interest rates, all of those kind of things that typically come with most other kind of debt financing. So as we recap, investing your 401k or IRA or stocks or bonds in your business can be a smart way to fund your business. And I talked about IRAs and 401ks today, but not stocks and bonds. And that's another way where you could leverage to get financing. We'll talk about that yet another day. You pay no interest. You create a retirement plan in your business at the same time. That allows you to give the ability to create other retirement plans for your employers and match their 401k, or even be able to get a loan or a credit line and just use that as you need to use it. The setup is perfectly legal. It's allowed by the IRS, no penalties, no with early withdrawal fees either. And if you'd like to learn more, you just get in touch with us and we can help you get financing. Speaking of helping you get financing, is what we do. We can help you get financing because we offer every legitimate funding program in one place with over 1,000 lenders. We never charge you fees. We don't charge you interest rate, or we don't charge you interest. We don't charge you fees. We don't charge you application fees. We help talk to you, figure all the funding you can qualify for, and get you with the right funding sources. And then we kind of manage the process. We make sure that everything is going okay. We make sure that you're having a good experience with the funding source that you're with. And sometimes the funding source pays us a referral fee. Sometimes they don't. But either way, you don't pay us a dime, and we negotiate with the lenders to get you better pricing than you'd ever get on your own. So we really wanted to make our ability to help people get financing available at no cost, even get you a discount. Because if you go to a lender and try to place your own loan, and we're placing $7 million worth of loans that month, no exaggeration, we do that easily with some single lenders, then obviously they give us better pricing, and we pass that right on to you. So if we can help you with that, let us know, 877-600-2487. If you call us for a free consultation, we will determine all the funding you can qualify for now. We will help you improve your fundability. We'll look at Secretary of State, other business reports that lenders pull, make sure that your business is set up where it's fundable. We'll qualify you for business credit. We'll give you tips and tactics there, even help you get free business credit reports with all 3 credit bureaus. All that happens on our consultation. Give us a call, 877-600-2487. And if you like this, then like, love, share. I appreciate that. And go ahead at creditsuite.com, the top right of our page, check it out. We go live Tuesday and Thursday at 1 o'clock, Wednesday at 11 o'clock, all Eastern time. We also have daily tips on places like Instagram and Twitter. So check us out. There's a lot of information. You can even listen to our podcast on the go. Caesar, hello. Thanks for coming in from New York. We're just wrapping up. But if you're just getting here, then all you need to do is go to the social channel of your choice. Caesar here is coming in from Facebook. John here is coming in from YouTube. A lot of others from YouTube and Facebook as well. Some from Periscope. So on Periscope, on Facebook, on YouTube, as soon as I end this broadcast, you will be able to go back and get the entire playback. So make sure you check out this playback, and make sure you check out all the rest of the ones we have as well. And don't forget to grab your free guide on business credit or on getting business financing at creditsuite.com/27 ways. That's creditsuite.com/2 ways. And if you do that, that'll give you a free guide on 27 ways to get cash for your business. Thanks everybody for tuning in. I'll see you tomorrow at Thursday at 1 o'clock Eastern, where we're going to talk about the steps to take to get set up with the business credit reporting agencies. Thanks everybody. Have a great